Chapter 4, Question 1. What must you know about the income statement to understand it? To understand the income statement, you have to be familiar with revenues, expenses, and net income. Revenue, I'll explain later what all of those are. Unlike the balance sheet, it's taken over a period of time as well. So a balance sheet is simply a snapshot, while the income statement would be over an accounting period. Okay, what is in the income statement? The income statement consists of three sections. Again, it's the revenue section, it's going to be your expenses section, and then it's going to be your net income section. Alright, what is the accrual concept? The accrual concept of accounting is the concept that regardless of when money changes hands, you act as if those bills will be paid. So even when the cash doesn't change hands and you make a sale and someone intends to pay you later, you act as though that money's already there because more likely than not you're going to have that money. Okay, what is revenue? Revenue is what your company makes before anything is deducted out. So that'd be revenue could be from sales, it could be from interest, dividends, or even royalties. Okay, what are expenses? Expenses are anything that is required to keep your business running. So inventory, bills, typically they're things that immediately bring revenue into your business. It should be anything to keep your business up. What is net income and how does it differ from revenue? So net income is it's essentially your bottom line. So what profit are you making at the end of the day? It would be basically your revenue subtracted from, or your expenses taken out of your revenue, which is how it differs from revenue, net income that is. Revenue is before anything's taken out, and net income's after expenses are taken out. What are interest and income taxes? Okay, interest and income taxes are expenses that would be classified as other expenses. So typically these expenses don't produce revenue for the business. They're just things that you have to pay in order to keep the business going. Alright, what is bad debt expense? Bad debt expense is money that should be paid by a customer, but for whatever reason they can't pay you back, so you just have to kind of eat the cost. Yeah, that pretty much explains it. Okay, what are transactions that affect the income statement? There's a lot of transactions that affect the income statement. Sales, partial payments, gross profit, operating expenses, all sorts of things. That's just a few. How do sales affect the income statement? So sales affect the income statement by deducting the inventory costs, so whatever it costs to get the good that you sold, and then whatever that expense was, subtracted from whatever you made from it. So finally, once you subtract those two things, that will give you your owner's equity. Your owner's equity, or your net income. Okay, so on the income statement, that's how it's affected. What are goods sold and gross profit? Your gross profit is going to be your revenue before you remove any sort of expenses. So it's sort of like your revenue. Okay, what are operating expenses and how do they affect the income statement? Your operating expenses are going to affect your income statement by being deducted from your profit. They are going to be your everyday expenses, typically, to keep the business running. It'll be like paying an employee or an electric bill. Yes, it should be subtracted from your net income. How will selling something but only receiving partial payment appear on and income statement. So when you receive partial payment, it's because you're using the accrual method of accounting. It should appear just as just as if you're paid in full, unless the person flakes out and cannot pay you. Then it should eventually be paid, and you just assume that it's going to be paid. So it appears just as if it's paid on the income statement. Okay. How does a transaction paid in full affect the income statement? It should affect the income statement the exact same, again, because of the accrual method of accounting. The cash actually is exchanged, though, so you do have the cash, and you know it's going to happen, unlike the partial payment, but because it's the accrual, you go ahead and assume it's there. Or you have it then, and you assume it's there before, just like the partial payment. Okay, what are some other operating expenses? Some other operating expenses in the book are defined to be things like bad debt, bank expenses, interest, and that sort of thing. Alright, that's chapter 4.